2014 proved to be a banner year for startups, with the IPO market reaching levels not seen since 2000 and tech companies riding the venture-backed wave, with about 40 startups garnering valuations of $1 billion or more. Companies like Snapchat, Dropbox, Airbnb all surging to valuations north of $10 billion, and five-year-old Uber fetching a $41 billion worth. And just this week, Chinese smartphone maker Xiaomi, only 4 years old, became the world's most valuable startup. $46 billion is the price tag there. So we ask, will 2015 continue the surge pricing trend? Joining us now from Boston, Sean Cantwell, a partner at the tech-focused venture firm Valuations. Sean, Happy New Year.
Happy New Year to you too. Good morning.
Good morning. We look at what we saw this year in comparison to 1999 and 2000, and one of the interesting things is that we have twice as many companies right now worth more than $1 billion than we did back then. What's the cause of that?
Well, I think there's a variety of factors contributing to it. For one, I think there's a perception that we're operating at a point in time with rapid technology adoption, and furthermore, the way that people are interacting and using technology is changing at a rapid pace. You combine that with the macro backdrop of a strong public market and low interest rates, and capital is really flowing into private markets. So much so that there could potentially be a dislocation between private markets and public markets where, post-IPO, public markets are having a hard time maintaining these lofty prices.
But people have a hard time, Sean, or they have had a hard time this year, talking about where the endpoint in valuations is. We had an equity strategist on last hour who was saying the hard part is technology is absorbing other industries, so you can always make the argument for multiple expansion. Where does that stop?
Well, I think what happened this year is you have a few companies that really served as bellwethers that are, really proving technology disruption of mainstream industries. Uber is the one that gets a lot of headlines. What's happening is these valuations are accelerating at such a pace. You can recall Uber turned heads a year ago, raising money at $3 billion valuation. Now we're at a $40 billion price. These valuations are really priced to perfection, where certainly investors love big markets, they love high growth, they love technology disruption, but these companies need to continue to perform and continue to grow at the expected rates, because ultimately every single company has to answer to the financial performance at some point in time.
Yeah, it's funny. We get yelled at for even using the term startup now by viewers saying, look, $46 billion company is not a startup, even though they might technically be that old. Here's one question I have, Sean. Are all these valuations and the access to capital negatively influencing the behavior of some of these CEOs and founders? Are they going on dangerous bends, whether it's regard to CapEx or rents, the kinds of things that some in Silicon Valley have been warning about?
That is really one of the biggest concerns amongst venture investors, Carl. There's a perception among some of these, younger startups that haven't lived through a down cycle that capital is cheap. And when that perception exists amongst operators, there's a bias to ramp up the expense base, ramp up the cash burn, with the expectation that there will be more money when you run out of the, the current capital base. The challenge is you really need to keep pace from a top-line perspective to continue expecting increased valuations. And, right now you're seeing a lot of high-risk, high-reward investing, chasing really low-probability outcomes. The Ubers of the world are few and far between. And like I said earlier, every company ultimately needs to be accountable to their financial performance. And while we will, we've seen successes in 2014, we're going to continue to see some successes in 2015. But there's also going to be a lot of companies that fail along the way because they get out ahead of their skis a little too much.
Sean, Alan Murray's writing in Fortune that, like Uber or not, they have changed the entire economic landscape. They have changed the way that management needs to think about their respective companies. Do you see another company like that out on the horizon that has the capability to change the economy the way that Uber has?
Well, I think Uber is the highest profile company today. And, we saw a lot of value creation among social media companies over the last several years. Right now, we're kind of in this period of the sharing or rental economy, Uber being the highest profile, Airbnb being another one, TaskRabbit, another company where they're people-driven applications that are basically enabling people to connect through these social networks to perform, tasks, that were not done through technology previously. Uber's a very interesting company because it's polarizing. It's gotten no shortage of bad press over the last 6 months, whether it be, passenger safety, treatment of drivers, how are they going to, behave as they enter new regulated markets. That said, the valuation just keeps going up and up. And I've talked to investors that have participated in some of these most recent financings.
Sure.
And it's their perception that this is a once-in-a-generation company.
Yeah, and polarizing might be one of the nicer adjectives people have used to describe Uber. But Sean, for now, we'll leave it there. Happy New Year, and hope to see you again in 2015.
Happy New Year to you too. Thanks.
Sean Cantwell of Valuations Capital.